Morning, Top Gun here, about 4:20 a.m. on Friday, April 23rd. This is the YouTube pre-market commentary. Okay, section 1, a divergence between the QQQ and the NASDAQ. So the QQQ represents the NASDAQ 100, which is the largest 100 stocks on the NASDAQ. And then the NASDAQ itself has about, I think about 4,000 securities that trade on it. So what's happened, as you can see in this tweet from Andrew Thrasher, is that about 80% of NASDAQ 100 components, the large stocks, are trading above their 50-day moving average, while only 38% are trading above for the broader NASDAQ as a whole, as of yesterday morning. So the big stocks are hanging in there. The small stocks are rolling over. Now, this dovetails nicely with what I was writing about on Tuesday, also playing off of a tweet from Andrew Thrasher, in which he showed that the small cap and micro cap stocks were not confirming the new highs in the large cap S&P 500 last week. So again, the large cap stocks doing well, and the small stocks rolling over. So combining it all, the major indexes are being held up by the large stocks, and they can do this because these are market cap weighted indexes. So the large cap stocks are going to dominate the index price action. But underneath the surface, all these smaller stocks are rolling over, which is a problem, especially when you consider the potential false breakout in the QQQ that I wrote about on Wednesday morning. So the QQQ hit a all-time high of 336.45 on February 12th. Then we had that nasty correction, and then we broke out on April 9th. And however, yesterday we closed below 336.45 at 335.20 for the first significant close. With a decent amount of gap below those February 12th highs since April 8th. So this is very important because the QQQ is the 100 largest tech stocks. Tech, the XLK, makes up 27.18% of the S&P 500. So it's really these stocks that are primarily holding up the market. So if they roll over, it's almost guaranteed that the S&P 500 and the NASDAQ will as well. So keep your eye on the QQQ. This is really the most important security in the market right now. Okay, section 2, Bitcoin below 50,000. So it was just last Tuesday, ahead of the Coinbase IPO, that Bitcoin almost hit 65,000. Now it was at about 48,000 3 a.m. and then 49,000 about 20 minutes after that. I don't know where it is right now, but we've had a significant correction of over 25% in Bitcoin in just a very short time. So again, this also shows waning risk appetite, as does the move away from the smaller cap, more speculative stocks. Okay, AT&T and Snapchat, a tale of two different kinds of stocks. Okay, so yesterday morning, AT&T reported earnings, and they reported a very unspectacular 2.7% growth in revenue and 2.4% growth in adjusted diluted EPS. Now, however, for AT&T, this was actually a very good quarter because they've been showing year-over-year declines for a number of quarters now, and the market really liked it, pushing the stock up 4.15%, resulting in a breakout to new 52-week highs. Now, it's not sexy, but it's got a cheap valuation. Inelastic demand for cell phone service, right? We're also dependent on our cell phones these days, and a 6.63% dividend. So I like it, and it's working right now, and I own it for myself and clients. Now, Snapchat is a very different animal. Nothing wrong with it. It's actually was up in the pre-market 6% based off its earnings report from yesterday afternoon, the last time I checked. But it's at a very different stage of its growth cycle and is a very different kind of stock. So daily average users were up 22%, revenue was up 66%, and it broke even on a non-GAAP basis. So investors aren't really worried about profitability. in a company like Snapchat at this stage of its growth cycle. What they're focused on is the top line, like I talked about in the contrast between Netflix and Procter & Gamble earlier this week. They assume that if daily active users continue to grow, which will translate into revenue, that ultimately profits will materialize as the company matures, user growth slows down, and they start to focus on profitability. It's a more speculative stock. There's bigger risk, but there's bigger reward. Different types of investors tend to gravitate towards the different types of stocks. A value investor like me tends to gravitate towards AT&T. A momentum investor that's looking for a big move fast will gravitate towards Snapchat. Now the stocks like Snapchat and the momentum stocks have been working much better than the defensive stocks since the March 2020 lows. However, as I pointed out earlier this week, consumer staples and defensive stocks are breaking out, and AT&T is another example of that. And so I think that that's where the value is. They're working right now, and that's where you want to be. I will see you guys next week.